Howdy, folks. Welcome to Liberty Call. Today is Tuesday, September 12th, 2023. Hope everybody's having a fantastical day out there in the interwebs. Apologize for being about an hour late. I had to go run into the office, get my mail, and do some other errands on the south end of Denver. But I'm back. It looks like the market wasn't in a good mood today. The S&P and the NASDAQ were in the red most of the day, and the Dow was in the green most of the day, but finished in the red. So kind of weird. But anyways, like I said, hope everybody's having a good day out there. It is a beautiful day here in Colorado. Lots of sun. It is not nearly as chilly as it was yesterday. It is 65 degrees. I do have shorts on because I'm a crazy person. But anyways. All right. Well, if it's your first time watching Liberty Call, I'm glad you're here. Thank you very much. We're going to cover the news of the day in the markets, what happened with the indexes, and I got a couple articles to cover about inflation and what the Fed, what some economists think the Fed's going to do here in the upcoming months. So we'll see what they have to say. So, but if it is your first time watching Liberty Call, if you could give me some thumbs up, likes, shares, subscribes, follows. I see you right there. You in the pink shirt, you need to hit subscribe, follow, and the notification bell. Do it right now. I'll wait. All right. Thanks. All righty. Let's go ahead and get into this numbers for today. All right, Dow Jones finished the day down 0.05%, 17 points, closed at 34,645. S&P 500 was down 0.57%, closed at 4461. NASDAQ was down 1.04%, closed at 13,773. Easy for me to say. The VIX was up 3.12% today. It's currently at 1423. Canada was up 0.2%. Brazil was up 0.93%. And Mexico was down 0.78%. Over in Europe, Germany was down 0.54%. The UK was up 0.41%. France was down 0.35%. Netherlands was down 0.3%. Spain up 0.21%. Same with Italy. Switzerland was up 0.14%. And Portugal down 0.04%. In Russia, both exchanges were green. MOEX up 1.39%. RTSI up 1.56%. And the overnights in Asia, the Nikkei in Japan was up 0.97. Australia was up 0.2. New Zealand up 0.09. In China, the Shanghai was down 0.18. The Shenzhen Component down 0.08. China, the China A50 down 0.32. DJ Shanghai down 0.17. Hang Seng down 0.41. And the Taiwan weighted was down 0.86% for the day. So, like I said, it kind of is what it is. I mean, I'm just kind of sitting back here waiting for everything to kind of fall apart and capitulate before, going to step 2 of my game plan of how to approach, this mess of a market. But we shall see what happens next. All right, let's go ahead and get to the market recap. Dow closes just below flatline as Apple falls in tech stumble. So what happened there? The Dow experienced a marginal decline on Tuesday, primarily driven by a dip in Apple's stock, despite the tech giant's unveiling of the iPhone 15. However, energy sector gains partially offset losses, and investors remain cautious ahead of the upcoming inflation data release. Apple's iPhone launch was met with a sell on the news, and that's in quotes, response from the market, causing the company's stock to close around 2% lower. While the event was largely met Wall Street expectations, some were surprised that Apple did not increase the price of its iPhone Pro model, maintaining it at $999. The same as the previous year. Nonetheless, analysts anticipate that the latest iPhone will encourage users with older models to upgrade to the more advanced and expensive iPhone Pro or Pro Max models. Well, the economy's kind of in, kind of a rut right now. And I'd say probably best thing to do would be to hold on to your ducats and instead of upgrading your phone because, food or phone. I mean, what's more important in the grand scheme of things? I mean, if your phone still works, use it. I mean, that's kind of how these things I keep for, 3, 4, 5 years until, last one just died because the battery stopped charging. And the phone was in perfect shape, but I couldn't replace the battery anymore, so I was stuck having to replace it. What was that, last year, I think? All right, diving back in, Oracle reported fiscal first quarter earnings that exceeded Wall Street estimates. However, the cloud provider's guidance for the current quarter fell short of expectations, leading to a more than 13% drop in its shares. Wow. Despite the setback, analysts believe that Oracle's growth driven by artificial intelligence remains on track, and the slower growth is not expected to change the long-term investment thesis for most investors. Energy stocks were a bright spot in the market with gains over 2% on the day. This rise was supported by an increase in oil prices driven by Saudi Arabia and Russia's recent decisions to extend oil supply cuts through the end of the year. Well, let me pause here. Why would we think Russia would be cooperative at all with the West? I mean, the West has been kicking Russia in the teeth for, 2 years now because of the whole, or a year and a half because of the whole Ukraine thing. And, which, if you know your history, the U.S. was involved in starting this mess back in, really going back to 2008. But the Maidan coup in 2014, we were, our CIA and our deep state was all wrapped up in that. So if you're just one of these people think Putin bad, learn your history, folks. All right, where were we? Companies such as Marathon Oil, EQT Corporation, and Occidental Petroleum saw gains of around 4%. Investor attention was also focused on the upcoming consumer inflation report scheduled for release tomorrow on Wednesday. Economists anticipate an increase in the headline consumer price index for August, while core inflation, closely monitored by the Federal Reserve, is expected to remain steady at 2% last month, but slow to 4.3% in the 12 months through July. The shift in demand from goods to services post-pandemic is believed to be a key factor in the slowdown of price increases in goods. I haven't really seen it. I mean, the grocery store is still very pricey for me. Overall, market participants were keeping a close eye on these inflation indicators as they awaited the Federal Reserve decision on September 20th. That's the next Fed meeting. The central bank is expected to maintain its benchmark interest rate unchanged, but any surprises in the inflation data could influence their future policy decisions. Yeah, I'd probably put the Fed decision next week at 50-50. That's just kind of how I feel right now. I mean, my personal belief is that the Fed should continue to raise rates. But I mean, these are government employees or pseudo government employees. They're cowards. No one wants to, be the person to stick their neck out and make a real decision. All right. Next up, got some info on inflation. U.S. inflation eroded 2022 wages as child poverty jumped, Census says. All right. The U.S. Census Bureau's recently released income and poverty data for 2022 revealed the significant impact of COVID-19 pandemic and the government's response on the nation's economic conditions. These findings underscored the challenges faced by the U.S. economy as it continued to recover from the unprecedented health crisis. I mean, I'd say the reaction to it was unprecedented with just, foolishness. But, don't create viruses in labs in China and spread them around the world, Dr. Fauci. I mean, come on. All right. So key points from the report include the number one, child poverty surge. The child poverty rate, as measured by a supplemental gauge that considers government benefits and household expenses, soared from 5.2 in 2021 to 12.4% in 2022. This increase was largely attributed to the expiration of pandemic-related child tax credits. Number two, overall poverty rate. The supplemental poverty rate for the entire population also rose significantly from 7.8 in 21 to 12.4% in 2022, primarily driven by the expiration of pandemic-era programs. Compared to 2019, the rate was slightly higher than the 11% recorded in the pre-pandemic year. The official poverty rate, which does not account for government benefits and expenses, remained largely unchanged from 2021 at 11.5%. Real median household income. Household income struggled to keep pace with the substantial 7.8% increase in consumer prices, marking the largest jump since 1981. Real median household income declined by 2.3% to $76,330, approximately 4.7% below 2019 levels. These findings have raised concerns and are likely to be prominent issues during the November 24 elections, where President Joe Biden seeks re-election. I don't even know if he'll be alive by then. A significant portion of the Americans disapprove of the president's overall performance, with the economy being a top concern among voters. Florida Governor Ron DeSantis, a Republican presidential nominee candidate, emphasized the impact of skyrocketing inflation on families, while a White House official pointed out that the census report did not reflect the recent easing of inflation in 23. President Biden, in response to the report, highlighted the consequences of congressional Republicans' decision not to extend the enhanced child tax credit while pursuing corporate tax cuts. The data provided one of the first comprehensive insights into the post-pandemic U.S. economy, which has exhibited unexpected strength in some areas despite rising interest rates by the Federal Reserve and persistent inflation. While the employment report is similar to pre-pandemic levels, various aspects of the economy have evolved, including higher female workforce participation and record low poverty rate among Black Americans. However, it is essential to recognize that the economic recovery continues to be influenced by the pandemic. I'm not sure how, with various factors affecting income inequality and overall economic conditions. The report also noted positive trends, such as an increase in health insurance coverage for Americans in 2022 compared to the previous year. Yeah, because that's important, because Medicare, Medicaid, and the insurance industry is primarily what has caused everything to be so damn expensive these days. So, but what do I know? I'm just a financial advisor. All right, last up, this was an article I saw last night. It's from Fortune magazine titled "Fed Will Start Cutting Interest Rates in 2024 Now That the, quote, tightening cycle has run its course," end quote, economists say. So let's see what, let me get my synopsis up here and see if these, fortune tellers are telling, something that we should really believe. All right, the American, hang on a second. Get a frog in your throat, it won't go away. All right. The American Bankers Association Economic Advisory Committee. Whew, I bet they may have an acronym out of that. ABAEAC, ABAC. Consisting of chief economists from leading North American banks, predicts that the Federal Reserve has concluded its interest rate hike cycle and will likely implement rate cuts of approximately 1 percentage point in the coming year. This forecast reflects expectations of slower economic growth while avoiding a recession in the quarters ahead. Simona Mokuta, the committee's chair and chief economist at State Street Global Advisors, stated that due to both demonstrated and anticipated progress in controlling inflation, a majority of the committee believes that the Fed's tightening measures have reached their limit. Yeah, 5%. Really. The upcoming meeting of the Federal Reserve is expected to result in unchanged interest rates, although there is an ongoing debate among investors about whether the central bank will raise rates later this year at the October 31st and 1st meeting and December 12th and 13th. The committee's projections indicate that economic growth will decelerate to less than an annualized 1% rate over the next 3 quarters due to the Fed's prior interest rate hikes and a tightening of credit conditions. Unemployment is expected to increase from 3.8% in August to 4.4% by the end of the following year, so end of 24. While the consumer price inflation is forecast to ease from 3.2 to 2.2 in July to 2.2, Mokuta emphasized that the odds of soft landing for the economy have significantly improved in the short term. Do you have any evidence that you'd like to provide? I didn't see it in the article. However, concerns persist about the sustainability of the economy's remarkable resilience. The committee's assessment places the likelihood of a recession in the coming year at slightly below 50%. These forecasts are regularly presented to the Federal Reserve Chair Jerome Powell and other board members, providing valuable insights into the economic outlook. So these folks seem to believe that this is the end of their rate hiking cycle, easy for me to say, and that they're going to start lowering rates, but they really don't provide any evidence here in the article. I mean, if you're going to say, I think this, here's why. I mean, is it that hard to do? I mean, it's kind of, with the whole COVID thing over the last 3 years. I mean, nobody read any of the studies half the time. I would read through the studies and go, wow, this, improved the likelihood from 0.1% to 1.5%. Wow, woo. And they go, wow, that's a 50% increase. Can you believe it? And it's like, it's this small. So anyways, all right, well, that's everything I had for today. If anyone needs anything from me, please go to dsafinancialgroup.com. All my contact information is there. You can book a meeting, send me an email, drop me a phone call, whatever you'd like. Hope you have a wonderful evening, and I'll talk to you guys next time. Adios.